Good morning, good afternoon, good day. Welcome to my midweek market meeting, 16th June 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q systems I use in my trading. They run on underlying TradeStation and Metastock platforms. In the versions that I will use today, you will see some performance improvement, significant it may be, on QVital when we retrieve the data on the home page, the scorecard of the individual stock. That performance has improved. And also in QEdge, the selection of industries, when we drill down, a little bit fine tuning has been done so that we can carry out the top down workflow, not selecting all the top industries in one go, but selecting one at a time. I'll demonstrate that. If you would not want to upgrade the latest version of QEdge, that is fine, but I strongly recommend upgrading to the latest version of QVital. I uploaded it today, therefore you may be able to download it after this session today. You will see every upgrade is to make a trader's life simpler. Let's start with the global markets as usual. Australian market, AXJO, continuing to be bullish in weekly, daily both. In daily, it is continuing to be above the upper boundary. It has nice trend line support. We would not like to buy now the positions that I took earlier, or you took earlier, near the yellow direction line. With a pullback long setup, you may continue to hold partial position. Bullish but overbought. Topics: in an uptrend in the daily chart, in the weekly also in an uptrend. Both weekly daily has trend line support. Daily trend line support is close to the price, similar to the Australian market. Any position taken at the bullish headwind signal, at which time it also gave a box long setup because it displayed the bull release signal and price reversed from watermark support. Any box come headwind long setup trade taken at that point, we may continue to hold partial position on that. Again bullish but near the upper boundary. China market, CSI 300. The closest trend line support in weekly has been broken now. There are two more trend line supports nearby. The backdrop color has turned bullish. Backdrop color has turned bearish. This long bullish shape candle that formed 4 weeks ago. After that, for 3 weeks, price has come down. I noted in the previous webinars that in the weekly we had two inside candles, and now price has come down. In the daily, it is still in an uptrend near trend line support. We would not like to take any short trade now. We never want to short near trend line support. We are not going to buy now as well. If price can bounce up from the trend line support, we may look for a long opportunity. If not in CSI 300, in individual, fundamentally strong stocks. FTSE Index UK market. Similar to Australia and Japan market, in an uptrend in the daily, trendline support very close to the price. Price is near the upper boundary. We would not like to buy now. Weekly shape is indecisive. For swing trading purposes, it is in an uptrend but near upper boundary. Also, the stretch band indicator shows that it is overbought for 4 days. We are not going to buy now. If we bought individual stocks, we would continue to hold that position. Remember in the last webinar, when we were on this day, I mentioned that though it was moving inside a narrow range, it seemed like price would go up from there. That happened. Didn't go up much, but it did go up. I would not like to buy now, neither would I like to short FTSE. Last global market we study Nifty 50 in India. Earlier it used to be the strongest of the global markets and it is back to that form. Made a new all-time high 1 week ago, and this week at the high it made a new all-time high again. Currently it has a doji candle and it has an indecision at the top. In the daily, price is at the upper boundary. There are multiple bear release signals and multiple indecision at the top signals. I'm not going to buy now. Any long position initiated at this point, which would be a possible go with flow long trade setup, I may continue to hold partial position on that. In an uptrend, but at upper boundary. We looked at all the global markets, all of them are in an uptrend. Only China market index CSI 300, the backdrop color is bearish in weekly, but still it is near trendline support in weekly. And the other markets, Australia, Japan, UK and India, all are in an uptrend. Weekly backdrop is bullish. Daily is extended from the recent low, so we may not want to take new long position, but we may continue to hold existing long positions. Now let's look at the USA market. Let's start with S&P 500 ETF SPY. Very similar to the global markets, isn't it? We saw this pattern in most of the global markets. Price is going up. Trendline support is very close to the current price, not far from upper boundary. Has some indecision at the top, has a bear release signal. I would not like to buy now. Neither am I able to short because there are multiple trendline supports nearby. Interestingly, the weekly backdrop color has remained bearish even now. It did make a new all-time high this week also, once again, but I'm not going to buy now. What about Nasdaq? QQQ made a new all-time high this week. In fact, it made a new all-time high on Monday, and Tuesday pulled down little bit with a bear release signal. And that pullback happened at the previous watermark resistance. Again, like most of the global markets and SPY, there are trendline supports close to the current price. If the trend lines were not there, I would be happy to try a short position in QQQ because the risk would be minimal. But looking at the trend lines, I am not going to short and I am not going to buy as well. DIA. This is the first market ETF in the USA we are seeing that is looking weaker. The weekly backdrop color has remained bearish for many weeks, similar to SPY. However, unlike SPY, it broke below trendline support in weekly with a bearish shape candle. Are we able to short easily? Not now, because it is near trendline support. If you followed me, my other live sessions, you know I shorted right on this day using the trendline resistance. I used precision entry or fine-tune 5-minute chart template. I booked partial profit and I am continuing to hold the partial short position. I will see if it can break below the daily trendline support. If it can break below the support, I will be continuing to hold the short position, and that would probably be the one of the highest shorting position one could find in Dia. Once again, I use the trend lines effectively and I use the precision entry templates effectively. The more you watch these live sessions, more you practice them yourself a bit, maybe on simulation, the more confidence you get to use the precision entry template, whereby you may take very low risk and end up with a much bigger reward, just like in this case. Right now, for swing trading purpose, I will not take a short now because it is near trendline support. Neither will I go long because weekly, daily, both colors are bearish. Last market ETF, IWM. Once again, we have bullish backdrop. So the shape in weekly is indecisive. Price is near upper boundary, not a place where I would like to buy. It is moving inside a box. The buying points would be near the lower edge. Shorting points would be near the upper edge. I would like to short if I get an opportunity in IWM. However, the weekly being cyan is not allowing me to short. If you looked at the 4 ETFs carefully, you would find that DIA is the weakest, and it is not a coincidence that I have a profitable short position in DIA. It was analyzed in time, I may say, with perfection in this case, and I am continuing to hold the partial position in DIA, bearish position. Overall, the market is bullish. There is no sign of bearishness, not even for DIA because it is inside a triangle. It is not in a downtrend. Now let's look at the market internals. Let's look at the mega cap top 20. Similar to the market, similar to most of the global markets also, isn't it? Both USA and global markets. Price is near upper boundary. There are multiple trend line supports nearby. Doesn't allow me to short too extended, too far above the recent low for me to buy. Same situation as the market overall. Now, if we look at the composite indices, let's see if the relative weakness of Nasdaq is continuing. Let me change it to weekly interval. The relative weakness in terms of percentage of stocks above 50 MA. That weakness disappeared for a while, and this week it tilted down again. But then NYSE also tilted down, so it is not true that as far as percentage of stocks above 50 MA concerned, now Nasdaq and NYSE are in sync at the right edge. In terms of percentage of stocks making new high, Nasdaq was weaker and that weakness is continuing. By the way, when you study new high low advanced decline up down volume, Q suggested interval is weekly. Whereas when you study the MA calculations, the suggested interval is daily. Let's focus on the relative weakness of Nasdaq in terms of new high low that is continuing. If you look at the advanced decline, it seems that Nasdaq has become little bit more weak than NYSE. Both of them came down, though price is continuing to go up. And here the candle charts are of the composites, NYSE composite and Nasdaq composite. The price candle charts are not of QQQ or SPY. Even the composites continue to go up, but the advanced decline has tilted down. Nasdaq has tilted down little bit more. You see the red line is little bit more down than in NYSE. Also up down volume, if you look at the red line, it has come down more than NYSE. So Nasdaq is again continuing, or again started being relatively weaker after trying to recover from the relative weakness for several weeks. If you also see the 3-month new high low, every time it goes to the extreme, it pulls back. That happened again for Nasdaq. It has pulled back below the extreme level. For NYSE, it is still at the extreme level. From that angle also, Nasdaq is weaker. What does it say? It says that it may not be the best time to buy tech stocks. That was the what was the best time to buy tech stocks? When I mentioned it, let me change it to the daily interval. When the percentage of stocks above 50 MA for Nasdaq went above the average line, that was the perfect time to start to buy tech stocks, and for swing trading purpose, it has given significant profit by now. Now it is again showing relative weakness, so I may avoid buying tech stocks right now. Individual stocks, of course, may keep buy setup, but as a whole, Nasdaq is now weaker than NYSE. One second. Let's now look at the extremely valuable, in my view now, the total view, which has everything Q has and more. This combines the insight from two composites, four major indices in a single chart. Percentage of stocks where 50 MA above 200 MA is still hovering at a very high level, 80%. Percentage of stocks above 200 MA is hovering around the 80% level as well. So both 50 MA above 200 MA and above 200 MA, they are at extended level. And in the last webinar I mentioned, though SPY was making new all-time high, QQQ just made a new all-time high, the yellow line, percentage of stocks above 50 MA, was not showing that bullishness. And this is of course the most sensitive one to price. So we look at this more to decide swing trade. The yellow line failed to go above the average line. Instead, it came down, retraced little bit, came down again. So the percentage of stocks above 50 MA is not showing the strength that is shown in SPY and QQQ. Also, the 3-month new high low has come down after hitting the extreme level once again, though price has continued to go up. And here I am plotting SPY. In this plot, the price candles are not so important. What is important? They are the 50 MA, 200 MA calculations and 3-month new high low, the accumulation distribution counts, and some other additional signals. What I am looking for at the right edge, when price is at an extreme, I am looking for distribution count. There is none. As I mentioned earlier, the previous 3 counts were all accumulation count, and I am looking for distribution count. There is none. So I am still not expecting price to drop sharply and suddenly. And as I mentioned in the last webinar also, other than the accumulation distribution count, MA calculations, 3-month new high low, and the individual accumulation and distribution days at the bottom, now we also have the Eureka days, cyan color candle, and let me scroll behind. Based on the current calculations, Phoenix days are not coming often. These are the Phoenix days. Cyan is Eureka or turnaround day or follow through day. Phoenix is turn down day or correction day if one came right after the first one. The yellow skull is the Hindenburg first signal. The magenta skull is the Hindenburg confirmation. And the down arrows are bingo, baby out of the bathwater. When a bingo comes at a lower price level, it may be a sign of exhaustion, as was in this case. Then we look for turnaround, that is Eureka day, which would be this cyan candle, which also had 4 accumulation count. So after the bingo, we could start to buy on the day we had 4 accumulation count and Eureka day. Other than the distribution count at the right edge, therefore, I am also looking for possible bingo, possible Hindenburg, but none of them are there. At the market ETFs level, we saw most of the ETFs, if not all, have trend line support nearby. That is also another reason I am not thinking price can drop sharply suddenly. It takes some considerable effort to break through one trend line support, and there are many trend line supports, multiple supports in most of the market ETFs. So it will take considerable effort for price to pierce down through all of them. There is no sign of bearishness in all the market level studies that we made. Now let's look at the Q edge market breadth, see if there is some weakness found there. Yesterday was a mixed day. Sector percentage going up, industry percentage going up, stock percentage going up. Slightly more bullish than bearish, but mostly you may say it's a mixed day, neutral day. Percentage of stocks in the extreme high bucket is only at 4.6%. It is not at an extreme. It may go up more. Before we expect a pullback from this perspective, from the bucket analysis perspective. No sign of overheating. However, if we look at the 1 month to 1 day sector, industry, stock advance decline. In the last webinar also I mentioned that though at that time the 1 day was very bullish, I mentioned that at that time the 2 day and 5 day were not looking as bullish as one would expect looking at SPY making new all-time high. And now if you see, that statement is true even more. Yesterday was a mixed day, but see the other periods, 2 day, 5 day, 10 day, even 1 month, not showing the bullishness that one would expect from SPY QQQ making new all-time high. And this is what I was anticipating, you may say. I mentioned in several webinars that the bearishness seems to be propagating from the left to right side, though the market is continuing to go up and we have up day in mega caps, down days in small caps, and vice versa alternate days. while that churning is happening, the weakness is gradually propagating from the current day to the previous periods. And that is clear now. That is a caution, that is an alert, you may say, that is not visible from market ETFs, not even from the market internals, not even from bucket analysis. That is the value, additional value of this plot. It shows the weakness in a way that other techniques are not showing. So that is a reason to be cautious. What about Finder? There also we have some caution. Let me make sure it is the USA market. Yes. The weekly Finder balance between bears and bulls. It is not bullish. 69% of all signals are bearish. Trend continuation almost 80% bearish. Trend reversal also about 70% bearish. Strength signals more bullish than bearish. That is because of large number of gap ups. And if you look at the relative size of the bearish and bullish signals, you can see trend continuation much more bearish than bullish. Reversal also more bearish than bullish. So the weekly Finder picture is telling us to be cautious. What about yesterday's Finder picture, daily interval? That is showing a mixed picture, just as we saw from Q Edge sector industry stock advance decline. Is there any cautionary signal here? Yes. The percentage of stocks or the stocks that are giving bullish signals, 67% of those are already at price extreme high. That is a cautionary signal. A healthy bull market will have more bullish signals from the yellow region, but now it is 67% of stocks at price extreme or pendulum high that are giving bullish signals. It has actually increased since I had the last webinar. It is 67%. That's an alert. And also, if we go back to the weekly interval, this was not there in the previous webinar. There is a sizable number of bearish headwinds in the weekly interval, while SPY QQQ made new all-time highs. That is also a cautionary signal. Again, this headwind signal you can see is showing us some caution, whereas distribution count hasn't come, Phoenix hasn't come, Hindenburg hasn't come. So all these signals look at the market from different angles, and when you assimilate all of them together, you decide on balance you need to be aggressively bullish or neutral or moderately bearish or aggressively bearish. Currently, it's telling us when we look at all the different angles. What are the angles? The global markets, USA market ETFs, the USA market internals, mega cap top 20, accumulation distribution count, Hindenburg, Phoenix, Eureka, the Finder technical breadth, Q edge, sector industry stock, advanced decline breadth. When we combine everything, what is it telling me? It is telling to be cautious, neither to look for long trades aggressively, not to look for short trades. In fact, finding short trades in this market may be difficult because all the market ETFs have many trend line supports. Mega cap top 20 also has trend line support. It will be difficult to find attractive short trades, though I did take some short trades and some of them gave very large profit, 100% profit, of course, using put options. I shared that trade in the last webinar. Let's look at that trade. That was CCJ. Oh, it is here, CCJ. In the last webinar, I mentioned that looking at the indecision at the top in the weekly, the fact that daily had multiple bearish headwinds and price at that time was struggling to go up, right on this day I bought put options expiring in July. Slightly in the money or at the money, around the money. Very next day, price came down by more than 10%, hit the yellow direction line, and my put options had more than 100% profit. So I have closed enough lots to get my money back, and I'm going to try to let profit run on the remaining position. That's a guaranteed profitable trade for me now. This was a discretionary short trade I took in CCJ, and I explained in the last webinar that the industry was very weak, suddenly turned very weak from being very strong. That was a reason for me to take the short trade. And I took a discretionary long in an IT stock, CTSH. Let's look at the chart which shows the historical trend lines. I took a long right on this day. Yes, it was a bearish traffic light. I saw some positive news on the stock. Fundamentals were looking okay. I looked at the industry, and for industry I looked at Indian market industry rotation using QH, because CTSH is an Indian stock, though it is listed in the USA. In fact, it is listed only in the USA. It is not listed in the Indian market. So I took a very low risk trade on a down day on a bearish traffic light candle based on the trend line support, positive news, strong fundamentals, strong industry. And I decided that if price breached the trend line support, I would exit it. And very next day it breached the trend line support and I exited. And I explained in a post, I in fact exited using fine-tuned chart. So I took a long position on this day. I am now using the fine-tuned chart, 10-minute interval, though in the morning session I would use 5 minute. My entry price was somewhere here. And next day, as it broke below trend line, the not trend line, the early range low, I exited my position. I didn't want to give it more time or space because it was a discretionary trade. And that has worked well for me. Price has come down. Instead of trend line support, it has trend line resistance now. If the trend line resistance can be broken, I wouldn't mind taking a long trade once again. In the alternate signals, it is inside a squeeze. If it can break out of the squeeze to the upside, gives a Q breakout long trade setup, I may not mind taking a new long position again. TJX was another discretionary long did I take. It was moving inside a narrow range. I took a long position and I am continuing to hold it. My stop would be just below this range. The stop has not been hit. Continuing to hold TJX. Again, it was a discretionary trade. Am I suggesting Q traders to take discretionary trades? Not really. Unless you have used the systems for a long time, you have a consistent profit using the systems and techniques, then you may start to see things that you didn't see before. Add to that your understanding of the stock of the market, and you may take discretionary trades at that time. So long as they are low risk, that is my suggestion. All these two trades I took, TJX discretionary long, CTSH discretionary long, and CCJ discretionary short. All of them had very low risk, and overall they worked quite well for me. Edu I am still continuing to hold. I will not go into that now. I will track it. Let's see if Edu gives me profit or loss. It's not a issue if it makes loss or makes profit. So long as the loss is small, I'm okay, and I managed my position. I'm continuing to hold the position in Edu. Instead of looking at Edu, let me now do a top-down analysis. Are we going to buy many stocks today? Today there is FOMC meeting decision, Central Bank of America, Federal Reserve, may not be the right day to start taking new trades. Not before the report comes out, not even after the report comes out. Maybe better to wait till tomorrow. Having said that, market is bullish but not at a position where I'd like to buy. Having said that also, let me demonstrate how you may do top-down analysis. Now how I do, I tend to, for example, let's go to the sectors. Look at the best performing sectors. But while I am doing that, let me calculate the scorecard of all the S&P 1500 stocks and mid and high price stocks. It has 2509 symbols. And I think this is a very good overall universe to use, not go beyond that. Low price stocks are speculative, illiquid stocks are not efficient. So this is probably the best overall universe one may use. If a trade setup is not in this universe, you may avoid trading that. So let's calculate a scorecard of all these 2509 stocks using QVital. And when I'm doing top-down analysis from QH, I will look for trade setups from this list, not from S&P 1500, so that I don't waste time looking at illiquid stocks or too low priced stocks. Scorecard has been calculated. Let's go back to QH. Now, QH has the ability to do top-down analysis of multiple items at the same time. So I could select the two best performing sectors, energy, financials, drill down to the industries of both of them. I could do that, or I could drill down to one at a time. The sector level is very broad. So if I do that, look only at the strongest sectors, there may be some healthcare industry that is strong, but I will miss that because healthcare as a sector is neither weak nor strong, in the middle, right in the middle. But some healthcare industries may be strong. That is why in my actual trading, I may do top down from sector, but I prefer to do top down from industry. So let's go to home. I'm going to drill down to the industry, or I could drill down to the industry percentage. Let's go to the industries directly. Find the best performing industries yesterday. Now, once again, I may select multiple industries, the strongest one at a time, and drill down to the underlying stocks. If I want to look only at S&P 1500, I may use this button, but I would rather look for S&P 1500 plus liquid stocks, not low, mid and high price. So I now am going to use this button, which will take me to Vital. Now some traders like to drill down one industry at a time. Not only that, they may want to look at stocks in each industry that has gone up more than the industry has gone up. How to do that? Let's go back to home again. Instead of going to the industry rotation, let's go to the industry performance. I'm going to the industry performance tab from the home page. Again, sorting by the performance, I have the best performing industries. Let's look at the 10 strongest industries. So I click the 10 button to select the best performers yesterday, and I am now clicking the scissors button to focus only on them. So these are the 10 industries. I am able to select all of them and go to the liquid industries in QVital. But if you wanted, let's do one at a time. Oil and gas drilling, and it went up by 4.9%. Some people like to look for stocks that has gone up more than the industry. So we look for stocks in this industry that went up by 4.9% or more. So let's look at those stocks. We have 3 stocks, and if I sort by performance, we have 2 stocks that we may look at, NBR and HP. Now see, I am combining the fundamental scorecard also here, and I see none of these 2 stocks are undervalued. None of them have high earnings growth, though they did go up more than the industry's percentage, and they are in an industry that is very strong itself. But I will not proceed to look at it. Why? Because I will most likely find stocks that are fundamentally strong also. So my review of this industry is complete. I go back to QH. Now let's look at the next industry. Tires and rubber gone up by 3.77%. So let's look at stocks that has gone up by at least that percentage. Look at the liquid stocks from Vital again. I am positioning my cursor anywhere on the industry, clicking the orange button. I have only one stock, GT. And here I have attractive fundamentals. Medium valuation, that's fine. It has high earnings growth, so it is a 1-star candidate. Has a short squeeze potential, went up by 3.7%, almost 3.8. Let's look at this chart. I click the chart icon to open it, and instantly we see it is giving a pullback setup. Is it so? Let's confirm. When I come back to the fundamental scorecard, I may click the lookup from Finder button. Let me do that. That will show what are the signals today. For Goodyear Tire, GT is the ticker, went up by 3.7, almost 3.8%. At price extreme high, went up with bullish pressure. It has given a pullback setup. It has also given a reversal candle. That is also the value addition of Finder. Sometimes we may miss reading something on the chart. If we look at the Finder, we'll get to know all the signals. And if we wanted to look at the alternate signals, I'm putting my cursor anywhere on Finder and clicking the lookup Finder button. Let's do that. It will take me to the alternate signals. What do I see? Again, Finder helps me to look at all the signals, important signals. Don't miss any. I see we have a big move. Big move over last number of periods. Now that we have done that, let's look at the chart again, and I'm going to open it using the weekly daily at a glance with the alternate signals. What are the signals here? Weekly has very nice support from memory trend line. Weekly shape is also bullish. Color is bearish, that is okay for a pullback setup. It has a bullish shape. It has excellent trend line support in weekly. In daily, in an overall uptrend, it pulled back to yellow direction line and went back, so it gave a pullback setup. Traffic light color is green. Relative performance is bullish. It has a bullish pressure. It has a bullish reversal at price extreme high, but still it is giving a low risk entry opportunity because top would be just below the recent low. In the alternate signals, by the way, on this chart at the right hand side, alternate signals, I have set the candle colors to same as Q entry. Earlier I had put the same color as in the ribbon, that is Bongo, but Bongo is a bit slow for swing trading purposes. The perfect entry time is often missed. For example, in this case, Bongo is still red. If I relied on Bongo, I would miss this pullback setup. Therefore, to make my decision easier, I changed the color in the alternate signals chart also to Q entry candle charting color, candle color, whatever it is, the right English, so that I am able to take the trade with more confidence. And in this case, I think though the Bongo is red, it's okay for me. Even the PSAR is red, it is okay for me because it is giving a proper pullback setup. It has a big move over last 5 days. It had high volume drop and then steadied at yellow direction line at weekly trend line support. That is giving me a low risk entry opportunity, thinking that this may be an exhaustion down move and it may go up at least just enough to give me a low risk long opportunity. That is how now you may carry out top down analysis, one industry at a time that may be favored by certain traders or multiple industries at a time, and instead of just looking at S&P 1500 stocks, you look at all the S&P 1500 plus mid and high price stocks. And I suggest not going beyond that, not going to liquid stocks, and not going to illiquid stocks, or not going to too low price stocks. Let's carry out the same analysis for few more industries. For oil and gas drilling, I didn't look at any stock because fundamentals were not good, and I am expecting some other fundamentally strong stock in the other industries, energy industries. Let's see if that is true. Oil and gas equipment and services went up by 3.3%. So I'm going to look at stocks that went up by at least 3.3% or around that. Look up the stocks again. Let's click the one star button because I'm going to look for either undervalued stock or high growth stocks. I have so many. Let me close the existing charts first. Let's select all the stocks, and now they are undervalued or high growth, and you can see I am also selecting the ones that went up by at least 3.6%, and they happen to have short squeeze, all of them. Let's look at them. Helix Energy, currently it is near upper boundary in an uptrend, but I would prefer to buy using the bullish headwind signal that came earlier or the first bullish flow that followed that. Maybe even here using a go with flow setup, also a pullback setup, but not at this point. In an uptrend, but not at a buy point. Pump, this is at a better buy point on the daily chart in my view, because it has created higher low, nice trend line support, bullish flow. Let me keep this stock. I'll come back to that. Let me go through the remaining stocks quickly and keep only the stocks I see as interesting. This one, no, inside a box, close. This one, nice support like pump, but has a trend line resistance nearby. I would rather go for pump. Close this. It's little bit extended above upper boundary. I would have bought at this point using go with flow or pullback setup. We are left with pump. Let's look at it using the 3 chart template. This is looking nice. Weekly has trend line support. Weekly backdrop is bullish. Shape is bullish. Daily flow is bullish. Excellent trend line support at higher low. In the alternate signals, it is at the channel support short term interval, breaking out of channel resistance for the longer interval. In this case, Bongo turned green. In this case, PSAR is also green, and we have a MOBO breakout, biggest up move in last 5 days, high volume. This is also giving a low risk buy opportunity, pump. Remember, I discarded the energy sector stocks that didn't have good enough fundamentals, and I thought I may get good fundamental stocks anyway. Why I said that? Because energy is one of the strongest sectors, and I find pump now. So when we have good fundamental stocks in strong industries giving low risk buy point, why buy poor fundamental stocks? So pump we could find. We found two stocks so far, top down analysis, looking at industries first and then one industry at a time, and only looking at stocks that went up by at least as much as the industry and with good fundamentals. Let's do one more. I have some more time. Let's look at integrated oil and gas. Went up by 3%. Looks at the liquid stocks. Look for one star candidates. Look at the only two stocks that went up by more than 3%. Royal Dutch Shell going up, but it is at upper boundary. I would not like to buy, some distance away from the recent low. Close it. Occidental. This may be a buying opportunity. Though there are other stocks, pump may be better in some ways, but this is also a valid buy because it broke out of the watermark resistance here. Before that, it was not in a clear uptrend, then moved sideways for a while, has excellent trend line support, has a bullish flow that gives us a very low risk buying opportunity. Let's look at it using the 3 chart template. Very nice. Why I say so? Because weekly is in a narrow range and breaking out of trend line resistance. That may be a perfect time to buy when it is in a narrow range in weekly and breaking out of trend line resistance in a squeeze in weekly. Daily has bullish flow, trend line support. In the alternate signals, we have support from the short-term channel, already broke above the downtrending channel longer term. Bongo is green. Biggest up move in 5 days. MOBO breakout. So there are multiple bullish signals. OXY is also giving a possible buy setup at low risk. Let's do one last industry, coal and consumable fuels. I have 5 more minutes left. Two stocks went up by significant percentage, but let's look for at least one star candidates. We have only one, CEIX, that went up and has a high growth and medium valuation. Let's look at CEIX. It is certainly bullish, but it is too high up in the price level, already gone up significantly from the recent low. I am not going to buy it. So we found at least 3 stocks using the top down analysis. What did I do? I looked at QH instead of looking at sectors or even looking at industry scorecard. I went to industry percentage moves. Industry percentage move table, looked at the top 10 industries, drill down to all of them, each of them one by one. You could drill down together also, but some traders prefer to drill down one by one. And instead of drilling down into S&P 1500 only, that is in QH, I drill down to all trading universe, S&P 1500 plus liquid, mid and high price stocks. And I looked at stocks that went up by at least as much as the industry went up. So I drilled down into the stocks, looked at one star candidate at least, and sometimes I didn't find any, sometimes I found some. I'm left with at least 3 buy setups already. One is GT, and let's look at these stocks once again on Q Elite Trade Station. GT, excellent trend line support in weekly, bullish shape in weekly, pullback setup in daily, traffic light green, relative performance bullish, bullish pressure, bullish reversal. In alternate signals, biggest up move in a week. Next one was pump, energy sector stock, bullish backdrop coming out of a squeeze in weekly, excellent trendline support in daily, bullish flow, high volume, alternate signals, bongo green, biggest up move in 5 days, Mobo breakout. And the last one I think was Oxy. Yes, nicely breaking out of trendline resistance in weekly. That is always a good point to buy. It was in a squeeze in weekly. Daily has trendline support, bullish flow, alternate signals, Bongo is green, biggest up move in 5 days, Mobo breakout. These are easy ways. There are other workflows possible, but if you are interested in top-down analysis, interested in finding stocks that are moving even more than the industry is moving, this is an easy workflow and you may carry this out in 100% real time. And let me show one more last thing. Let's go to QVital. I mentioned that the performance has improved when we look up the scorecard of a stock here. That is because I am now doing more parallel processing. So let's look at one of those stocks. Let's look at pump. When I type the root stock, it is doing many things in parallel now, and you see the scorecard is coming almost instantly. It is not waiting. Remember in the webinars earlier, I had to go to the QH to look at the industry while it was calculating the scorecard. It is still doing some calculation in the background, but I don't have to go to the QH. Anyway, this industry is very strong. And if we check again, let's check OXY. See, I type the ticker symbol. It is retrieving data and it will calculate the scorecard for the home page quite fast. Unless it doesn't want to cooperate with me. Not cooperating, is it? Is OXY not the valid symbol? Let's try another one. Let's try IBM. I know that symbol is correct, definitive symbol. In any case, I am running the webinar. I am sure you will see the performance improvement because it is doing parallel processing now. Let me end today's session here. Thank you for attending. I look forward to seeing you in my next session. That will be during the weekend, mostly on Saturday. I'll announce the time on my Twitter page, and if you are subscribing to the YouTube channel, you will get notification from there as well. Thanks once again. Keep safe. And as always, no reason not to do so. Trade profitably.